Now people would have entered from this area down here and had their stop loss below down here or even down here and likely would have got stopped out. Now why is this wrong? Well, the reason why this is wrong is because I took a scalp long on BTC and I will be explaining to you exactly how and why I took this entry so you can take it next time too. Now in this video, I'll be breaking down my exact strategy and my entry criteria of how I take these high probability scalp setups. Now the very first thing that you need to understand is your higher time frame bias. Now let's go on the weekly time frame. What we can see overall right now, the market is trending downwards. So we know we are in a bearish market right now. Now, having said that, this entry that I took was a counter trend entry, but it's still higher probability. Now, although our overall higher time frame bias on the weekly time frame is bearish, as you can see, let's go deeper into where we currently are in the market down here. And we may need to go into the daily time frame to identify this. What we can see down here now, our bias, it's a bit confusing. We are in consolidation basically. Price has been consolidating within this region. Now, the first thing that we need to understand is the way that the market moves. Normally we have impulse, correction, impulse, correction, impulse, correction, and we'll come to a key area down here for an impulse and we'll have a reversal. Essentially, what we're expecting right now is if we just zoom out, price has been impulsing, correcting, impulsing, correcting, impulsing, correcting. We haven't yet come into a higher time frame key region, but this is an area where price can have a relief rally. Watch my previous videos to help understand why we are in a key area for a relief rally to the upside. Now, to go into the details of specifically where we're expecting price to go and where the bias should be, what we need to understand is our dealing range. What we can see down here is a swing high and a swing low. We can identify our dealing range with these swing highs and swing lows. Therefore, we can mark on the high point and the low point down here. Now, essentially, what you want to identify is when we're looking within this dealing range, we should be taking long positions down here, which is known as your discount, and short positions within your premium side. Therefore, only looking for longs within here. And as price comes within this area, anything above 79,000, we will be looking for short entries down here. Now that we've got that cleared out, what can we expect? So the first thing that we can expect is for price to come into at least the 50% of the dealing range, which is your premium side of the dealing range at 79,200. Now, what we can see down here is price came out of this consolidation, attempted to come into at least around the 79,000, but we failed to. We came just below at 78,000 and we came back down. Now, this is a good sign because essentially what this means is there is liquidity resting above down here. And what does that mean? Liquidity is essentially people entering positions at a key area like this and putting their stop losses just above down here. And what does smart money teach you? Smart money teaches you to take entries and target the areas where liquidity is. Therefore, we know there's liquidity resting above down here. So we will be looking for long positions and we will have a bullish bias. Now, although price has come back within the consolidation, this is where we need to tread carefully and look on the lower time frames and look specifically for clean and bullish order flow. So essentially what we want to target now is these highs down here getting taken out and price potentially coming into this 50% dealing range. We also have a weekly fair value gap down here, which you can see, and I'm just going to remove this now. So this is the region that we're expecting price to come into, 79,300. Now going on the 4-hour time frame, what can we see? We can see very, very clean bullish order flow. And what do I mean by that? Price is trending upwards in a very clean manner. We can see swing lows, swing highs, swing lows, swing highs. Price is taking out liquidity as we come down, and this is called clean and clear bullish order flow. Now, what do we expect as price comes down here? We want to see a sign of reversal so we can take a long position and target number one, these highs down here, and then secondly, target the area down here at 79,000. So let's play the bar tool and see how price plays out. Now, what can we see down here? Prices come down, we swept liquidity, and we move up, we retrace, and we continue moving up. Now, to take a scalp position, what you want to do to make it a high probability scalp position is look for key areas on the lower time frame and enter based on a continuation. So we know price is moving up, price has come down, and we won't enter directly from here. What we want to see first is clean, clear, strong, aggressive price action moving to the upside, impulsive. And this is exactly what we see on the 4 hour. Once we see this, we will drop to the 1 hour and look for liquidity. So what we can see down here is as price comes down, we move back up, and that's our first sign to confirm, okay, price is likely going to continue moving up from here. So let's get ready to take some long positions. Now, as we move up down here, price comes down, we sweep liquidity one more time down here, and then we get a deeper pullback. Now, people would have entered from this area down here and had their stop loss below down here or even down here and likely would have got stopped out. Now, why is this wrong? Well, the reason why this is wrong is because we need to use this. We need to use the dealing range low to the dealing range high. I taught you this just now. And what we expect is for price to come to the discount side of the dealing range. The green area is your safe zone to take your entry. Now, if we had taken our entry from this low to this high down here, we would have been in the red zone, and that's not our safe entry. Therefore, we wouldn't be taking this entry. So as price comes down, we come into the discount side of the dealing range, our safe zone. We want to look for a sweep of liquidity. And what can we see? We see a sweep of liquidity down here. And essentially, if you wanted to, you can enter on the 1 hour time frame as we get that bullish engulfing candle and put your stop loss and below these lows down here. Or if you want to be a bit more aggressive, you can put it just below down here, or you can go into the lower time frame. Let's drop into the 15-minute. And this is what I love about the 15-minute, because what we can see is we can see this bearish order flow. We get a move up and then we get a move down. What we want to enter off is a fair value gap or an OTE level. Now we have a fair value gap down here, and we also have this region down here from these lows to these highs. Price doesn't come into the OTE level, but we do tap into the fair value gap. And usually I take my entry from the beginning of the fair value gap, and I do normally have a tighter stop loss because this is a scalp entry. I would put my stop below the swing low points down here, so my stop will go below down here. So I would have a slightly wider stop loss down here. Now, in terms of targets, where am I targeting? Now, I discussed with you already where our bias is and where we're expecting price to go. Therefore, my first target is going to be looking at the swing point high. And where is the swing point high? Down here. That's my first target. We'll target that first. And the second target essentially will be, if we go on the daily time frame, we can clearly see our fair value gap down here. And that's exactly where price came into. Now, that's a breakdown of my strategy of how I take my high probability scalp positions. If you like these types of videos and want to see more of this type of content, drop a comment below. Let me know what else you would like to see, and smash that like button. Subscribe if you haven't already, and I'll see you in the next video.